Hey,
Hi.
that's how I feel today, honestly. It's the low energy Wednesday. Low energy. Like I know all Wednesdays are low energy, but let's be honest. This is like a Wednesday of a Wednesday right now. Yeah. I don't know what it is. Just really, really low. I low energy will be up on Friday because homecoming starts this weekend. So playing Quincy, is that right? Yeah. What's your prediction for the game? Parker's getting a touchdown. All right, Parker, I'm gonna hold you to that. I know you have no control over it since you just catch the ball instead of well. But if there's a ball in your hands and you drop it, I'm gonna count 5 points off your next exam.
It's fair.
But hold on, no, that's not fair because no, it's not fair because if there's a ball thrown to you, then by logic, I should give you 5 extra points if you catch it. And the problem is that's extra credit and not everybody gets the opportunity. So I think in order to balance everything out, everybody in the classroom needs to be able to play as a wide receiver this weekend, Yeah. Well, I'll take turns giving the pass, Everybody cool with that? Yeah. Yeah, all right. Well, now that we got that worked out. I mean, I got to keep things equitable. Got to think that equitable. Uh, that changed the energy levels for sure. So, um, just as a reminder, this is our last chapter before we start prepping for the next exam. Our next exam is next Wednesday. So talk about a low energy Wednesday. We'll have that a week from now. Study guide is posted as well as the practice exam. Quick note about the practice exam and possibly the exam. I cover the chapter 17, 18, and 19 somewhat interchangeably. Sometimes I started with chapter 21, or sorry, chapter 17, 18, and 21. Started with chapter 21 occasionally and then moved to 17 and 18. So if you see them in a different sequence, don't panic. It's just kind of something I've done in the past. But 21 is not going to be a heavy emphasis for the exam. So you pretty much start studying right now and have 95% of the exam literally covered with the content. Part of the reason that I cover this is a area of emphasis for the CPA exam, and plus it's going to be an area of emphasis that's going to be relevant for those of you who go into professional practice in the real world. I've already mentioned that if you talk to a recruiter at a public accounting firm, they're not going to call it the audit practice. They're probably going to call it the assurance and audit practice or just the assurance practice. And we already know about the relationship between assurance and audit. This is the diagram that we talked about it back in chapter 1. I went over this very, very briefly with the promise of more to come. Today is more to come. So what do we mean when we talk about this? And the idea being is that anything that improves the quality of information we consider to be assurance. And we've used that term quite frequently in this course. I've used that kind of as our metric for how do we know when we finish the audit? The answer is we've gained enough assurance to be confident of our assessments. So it makes sense that assurance would be related to audit, and that's the relationship right there. Now, holding this in mind, keep in context that we've talked in detail about the nature of an audit. All right. And everything that you know to date has basically been about the rules and the procedures that go into an audit. We're going to talk about practical applications of that moving into the next exam. We're going to have a 3-week blitz of information that I'm going to throw at you with respect to the business processes. It's going to be 7 chapters in 3 weeks. It's going to be glorious. Okay. That being said, it will be specific applications of everything we've talked about so far. So you already know what you need to know about the rules for an audit. Audit is very specific in the procedures that we have to follow. We have to do very, very specific types of testing. We have to follow very specific protocols. We've got a very, very specific set of rules we have to follow. In fact, I'd say multiple sets of rules. We've got our generally accepted auditing standards. We've got our auditing standards that kind of dictate the parameters of types of testing, which are going to be PCOB or ASB standards. And then you could even argue that we've got professionalism standards, which we're going to talk about after the second exam. We're going to talk about the code of professional conduct. So a lot of rules, which if you're one of those people that's like, I don't follow rules, Dr. Barnes, probably not going to be a good auditor if that's the case. But holding that idea in context, well, let's talk about the nature of attest and assurance services. Now, what I'm going to show you is not going to be the full array of attest and assurance services. I'd argue this diagram right here doesn't even show the full array of attest and assurance services. We're going to talk about it at a very general level. I'm going to try to keep it fairly simple because I don't want this to be a focus of emphasis for this course, but I do think it's important to have some exposure in this area. So what do we mean? And what is the difference? What is it that we're going to kind of how to separate these out? Well, for context, we know what auditing is. attest services occur when a practitioner is engaged to issue or does issue an examination, a review, or agreed upon procedure. Now, those are bolded and italicized. That means we're going to talk about each of those in detail in just a second. So procedures report on a subject matter or an assertion about a subject matter is the responsibility of another party. Now let's just go back a couple slides. We know that auditing is a form of attest service. Auditing is a form of attest services. Okay. Does this paragraph that I just used, could that be used to describe an audit? If I were to say, okay, a practitioner is engaged to do something or a report on a subject matter, the assertion about a subject matter, it's the responsibility of another party. Does that describe the nature of an audit? At a very general level, yes, it does. All right. So that is why we say audits are forms of attestation, but there's a lot of different ways we can approach attestation. And then assurance services, these are independent professional services that improve the quality of information or its context for decision makers. That is a very general statement, and that's also applicable to an audit, which is why audit falls in those ovals that we've looked at before. So again, let's go ahead and just kind of make sure that we understand what it is we're going to be looking at, what we've looked at before, and what we're going to be looking at moving forward. Now, the vast majority of the book is focused on financial statement audit and audits of internal controls. So those are related. We've talked about that relationship already. So chapters 1 through 19 we're covering. We're actually not going to go through chapter 19 or chapter 20. Those kind of have to do with professional liability, which we're going to cover at a very basic level, very high level. But if you were to look through the book and talk through what is contained in a financial statement audit, the book is mostly about financial statement auditing and auditing of internal controls. The only thing that we're going to talk about with respect to standards in attestation engagements and other assurance engagements are going to be the things we covered in chapter 21. So the first part of the chapter covers attest engagements, which that falls under a series of standards called Statements on Standards for Attestation Engagements, or SSAEs. And then other assurance engagements fall under a separate set of standards, which are statements on standards for accounting and review services called SSARSs. Now, again, it's important to understand the difference between these standards. These are all under the great umbrella of AICPA standards. AICPA has a different series of standards, and these would be put into the same set of standards with auditing standards, but they do have different sections, I guess is the best way to describe those, is how we would interpret those. And we already know audit engagements, those are subject to either statements on auditing standards that are PCAOB standards. Just to remind you, when I say statements on auditing standards, those are ASB standards, Audit Standards Board, which is a subset of the ICPA. Okay, parties and attestation engagement. That's the party right there. Pretty fun. That's what makes you want to be an attestation. It's not that type of party, sadly. Love it when I deliberately misuse the term. I did it with engagement. Now I'm doing it with parties. Okay. Those are some fun words that I put into a really boring context. Yeah, that's the way it works. So this should be very familiar to you. This should look like the principal agent relationship that we talked about earlier in the semester. And it is. It's effectively the principal agent relationship. It's just more general terminology. So we've got the user and the responsible party. And the user and the responsible party are basically the principal and the agent that we've talked about before. Remember, principal is the owner of the organization, the agent or the manager of the organization. In this context, we use the more general terms because that relationship is not as defined. Okay, a user could be anybody who's using the financial statements for whatever purposes. That could be a bank that's approving a loan for an organization. The responsible party is anybody who's preparing the financial statement or the financial statement information. Okay. Now, when I say financial statements, there's going to be a lot more variety of detail. It's not just the financial statements that we look at in audit. It could be components of the financial statements, related information to the financial statements, such as compliance and disclosures. It could be anything that's in that vein. That's what we're talking about with respect to responsible party. And something that I'm really, really bad at, and I've gotten a lot better, but I'm still pretty bad at, is that this party that kind of mediates the relationship is not the auditor, it is the CPA. And we have to be very specific about that because we're not performing an audit engagement. We're performing an attestation engagement. So if you ever hear me say the word auditor in this particular chapter, either I'm referring to the last part of the chapter, which talks about internal audit, or I've misspoken, which happens quite a lot actually. But it's not an auditor in this particular context. We're talking about the CPA's relationship here, but largely this is the same relationship. The CPA works on behalf of the user, and they try to make sure the responsible party is telling the truth in their representations, or their representations are accurate. So that's basically kind of the relationship we're familiar with already. It's just a little bit of different vernacular that we're using. Okay. So I'm going to go through these slides and I'm going to point out certain tables that are within the slides. These are areas of study focus that I think you should focus on. We're going to be doing the entire lecture today, but it's basically going to kind of boil down to one multiple choice question on the exam. I'm going to tell you basically where the multiple choice question will come from. So that should be the focus of your study. This is the first of those slides, this table right here. And you will need to make some notes on this table because there are some things that I want to clarify with representations made of the table. With respect to attestation engagements, there are three categories of engagements that you can perform as part of an attestation engagement, okay? The first of these is called an examination. And when you write the word examination, I want you to write down effectively an audit, okay? It's effectively an audit. Now, it can do different things other than look at financial statements, but the level of assurance that we provide is extremely high. That's reasonable assurance levels of assurance. Remember, we can't reach absolute assurance. That's impossible. So reasonable assurance is the highest level of assurance we can feasibly achieve. That's an examination. That's an audit. Also, attestation risk is low, much like our audit risk that we talked about before. Okay, it's very low. We do issue an opinion just like we would do in an audit. It's a specific opinion about the nature of whatever it is we're required to report upon. And then the report distribution can be either general or limited. Okay, it can be either distributed to a wide audience or it can be to specific parties. So not too much to learn new in examination, but we do have some additional information we're going to throw out here in just a second. The next of these is called a review. And basically the way you should think about a review in all contexts, and there will be multiples of those, multiple contexts, is a review is substantially less in scope than an audit. Substantially less in scope than an audit. How do we know that? Well, the level of assurance that we provide as part of a review is going to be much less. It's moderate, the medium levels of assurance. Also, the attestation risk associated with the review is going to be moderate as well. And we have this type of report, which we've seen before. We talked about this on Monday. We do not issue an opinion. We issue something called a conclusion. Okay, it doesn't say that in the table, which is why I said you're going to have to make notes on this table. Reviews issue something called a conclusion, and this conclusion reveals negative assurance. We are not aware of any material modifications that need to be made. So we're not saying we're positive the financial statements are free from material misstatement. We're saying we're not aware of any changes that should be made, which is a much less compelling conclusion. It can also be general or limited in distribution depending on the nature of the engagement that we perform. Usually that's agreed upon between the parties that are involved in the engagement as to whether it's general or limited. Then we have something called agreed upon procedures. And agreed upon procedures are very much lower in scope than either an audit or a review. Now, you will notice that in level of assurance and attestation risk, it says low or it says variable, okay? I want you to write down that when it says next to variable, for a level of assurance, this should almost always be low. We provide very minimal assurance, if any assurance, with respect to agreed upon procedures. The attestation risk is almost always high. The reason it says variable in this table is that it is subjective. There are situations that we can provide some assurance and we can reduce our attestation risk, but that's very uncommon to happen in agreed upon procedures. It does not happen very frequently. This should effectively be low down here, and this should effectively be high. It's basically the opposite of an audit. In the type of report, it's important to note that we do not issue any kind of opinion in agreed upon procedures. We're not trying to make any judgments in that particular regard. All we do is provide a summary of our findings. We are engaged to perform a particular task. We summarize the results of our work. That's what we provide. And agreed upon procedures will always be limited in report distribution. That's a lot to remember, right? I just threw an entire table at you and said, yeah, there's 4 of these tables. You need to know all 4. And I just threw one of you, and there's a whole lot of information. Well, there's a lot more we got to go through because this only covers half of what we want to cover with respect to attestation engagements. Because attestation engagements can be made up of engagements and services. So we still need to talk about the services that can be provided. Now, when I say type of engagement, I'm talking about the general level of services provided, whereas the services refer to those specific procedures. So we might say an examination, which the examination is the type of engagement of pro forma financial statements, which is a service to be provided. All right. So there's 6 different levels of service. Not all of them are applicable to everyone. It's in fact, you want to know which ones are applicable, which is another table we'll get to here in just a second. So let's go ahead and first talk about the general types of services that we can provide as part of attestation engagements. So the first one is referred to as agreed upon procedures. I know what you're saying. Okay, you're saying, Dr. Barnes, you just said that was an engagement. Okay, what's up here? The answer is it can be both, okay? Agreed upon procedures to perform agreed upon procedures, which is really, really confusing. I know I didn't make the rules, all right? I'm not the AICPA. So they call them agreed upon procedures, and the idea behind agreed upon procedures is that they're just basically specific or engage to report on specific agreed upon procedures, which that's even worse because they use the term to define the term. Isn't that really, really frustrating? It's like, what does that mean? Oh, it's like, well, when you do something. Yeah, yeah. So agreed upon procedures is just basically an agreement between the parties and the CPA to perform certain tasks. And those tasks can be very widespread as long as they improve the quality of information is basically all that we're trying to look for there. So that attestation engagement. So you can probably guess a service to perform agreed upon procedures can actually follow agreed upon procedures. Okay. So if we're going to be performing the service agreed upon procedures, we can also use that as the engagement type. So you can just say agreed upon procedures. Now, the reason why we just don't say agreed upon procedures flat out is that the engagement type agreed upon procedures can be used in other contexts. But this is a service that's just kind of an open-ended service to perform agreed upon procedures. All right, now, another type of service is called prospective financial statements. So in the financial statements that we talked about for financial statement audit, what type of financial statements are those? Are those forward-looking or backward-looking? Those are backward-looking. Those are the ones that you've learned about in all your financial accounting classes. We call those historical financial statements. If a client has forward-looking financial statements, they refer to those as prospective financial statements. Can we perform assurance services in that area? Yes, we can't necessarily perform audits in that area, but we can definitely perform other services in that area. Those fall under attestation service. So forward-looking financial statements, these are usually not based on historical cost, which makes sense because they're not historical financial statements. So the types of attestation engagements we can do in this area are examinations and agreed upon procedures. I also want to make a note that we're going to see this as preparation and compilation. Make a note that preparation and compilation are not relevant to attestation, but we are going to see them in assurance. That will make a lot more sense once we actually get to the assurance section. But if you see this come up in preparation and compilation, we're talking about a different set of procedures. In this particular context, somebody else prepared the financial statements, and we're the ones who are providing some sort of attestation over them. So prospective financial statements, it's a little bit like auditing the financial statements, except they're not historical financial statements and we're not performing audit procedures. But other than that, the context is the same. So high levels of assurance and very low levels of assurance is where we can fall in the middle. Then something we've talked about that's related to prospective financial statements are called pro forma financial statements. Now, what is the difference between pro forma financial statements and prospective financial statements? The answer is these are projected financial statements. So these are very similar to prospective, except they're based on certain assumptions about future options. So what was the context we talked about pro forma financial statements already? We talked about them with respect to subsequent events. So we said, how is this subsequent event going to change our operations in the future? So pro forma financial statements take into assumption a particular event is going to affect, it's going to disrupt what we believed was going to happen. So instead of just looking at forward-looking financial statements, everything else being equal, we take into account some sort of item that might disrupt the financial statements, that might change the financial statements. Again, these are forward-looking, not based on historical cost. With respect to the types of attestation engagements, same rules basically apply, except we can't perform agreed upon procedures. We can only perform examinations and reviews. The reason why is that these are a lot more subjective in nature than prospective financial statements, simply because we don't understand what the nature of the disruption will be. It's very hard to make a projection. So there needs to be a lot more scrutiny on the part of the CPA. Right? So agreed upon procedures, prospective financial statements, pro forma financial statements. We're halfway there. All right. What is going to be our next category? The next one should be somewhat familiar. This is compliance. Okay. This is verification of clients' compliance with associated laws and regulations. I want you to get in the habit, by the way, when you hear the term compliance, think laws and regulations. That was something I told you back in AIS. It still holds true today. Compliance in this context is not meaning the word comply, because that basically said, well, we comply with rules. That could be anything. Compliance in this context specifically means compliance with laws and regulations. What are the rules of the industry in which you operate? And do we need to actually validate your operations that they are in compliance with those rules? This would be an example of that type of procedure. So types of attestation engagements, examination, agreed upon procedures. Next, we have something that you might be surprised that this holds up to the level of scrutiny it does. but this is something called management discussion and analysis. Has anybody ever seen this in a 10K? It's a section of the financial statements. So technically part of an audit, but this is a very specialized section because these are representations made by management, okay? So comments made by management related to financial statements, we can actually perform attestation services to validate those comments. Now, this is not an audit, but it's very similar in context because this is more subjective in nature. Keep in mind, an audit is generally going to be very focused on objective details, even though we have to have subjective results. These are going to be a subjective commentary. This is basically where management kind of provides their own spin on things, and we have to make a determination. Is this a valid assessment? Is this valid? Can we verify that this is a correct representation? Types of attestation engagements are fairly high level: examination and review. And then the final one, this one should be somewhat familiar. This is service organizations, okay? So remember those SOC reports, system and organization control reports. This is kind of where we see that come into place. So this is going to be testing controls and operations at place at organizations that provide services to clients. Now, this is going to be a little bit of different spin on the SOC reports we talked about before. Remember before I said SOC 1, Type 1, SOC 1, Type 2? I said, who are we in that situation? We are the auditor of the client that's using the services. In this context, this is basically the service auditor. This is the person who or the individual or the organization that's providing the controls testing, that's providing the audit for the service organizations, and they are responsible for developing these reports. So they test the controls, they develop a SOC report, either Type 1 or Type 2, and they issue that on behalf of the client. As we're going to find out when we get to the end of the semester, presumably it's possible that some all three groups could say, we're staying away from SOC reports, Dr. Barnes. We'd much rather talk about governmental accounting. It's like, oh, you do you. All right. But we do need to know that system and organization control reports can take a wide variety of flavors, okay? We just talked about SOC 1 Type 1 and SOC 1 Type 2, but there's also SOC 2 Type 1, SOC 2 Type 2. There's SOC 3 reports, and there's two specialized types of reports as well. The service auditor could be responsible for any of those types of reports based on the requirements of the client. So the types of engagements, these are very specific. They can only be examination engagements because these require a very high level of scrutiny and high level of detail because oftentimes they're going to be used by third parties. So we want to make sure that the level of detail provided. All right, so that was a lot to take in. That was like 6 slides, but fortunately I provided the summary of that slides here. So here's slide number 2, okay? This is slide number 2 that you need to focus on. And this is basically determining, based on the services that are listed, what type of reports can you issue here, okay? What type of engagements can you perform? Which makes it a nice, neat summary. You can don't need to thank me for that. You can thank Becker. I did steal some stuff from Becker here. Don't tell them that, although I realize that now sending this on a YouTube video, that maybe they've got the Becker police out there and say, are we seeing stuff? Actually, technically speaking, it's fine because we're partnered with Becker, so I can use some level of slides. But I'm going to hurry on just in case. All right. So what are the similarities to auditing? Well, given this is a form of attestation, there are definitely several similarities. I already mentioned that examination provides a level of assurance comparable to an audit. Also, attestation standards are comparable to generally accepted auditing standards. Now, again, we have not talked specifically about the categories of generally accepted auditing standards, mostly because I don't think that that's as relevant to the actual practice of auditing. But there are 3 category areas under generally accepted auditing standards, which are general field work and reporting. Those same three standard areas actually exist for attestation standards. Now, just to remember, I think I talked about this a little bit earlier in the semester as kind of a passing commentary. The kind of the guidelines for how to perform an audit, those are covered by PCAOB and ASB standards. The quality control and kind of the overview of auditing firms and the rules that they have to follow, those are going to be covered by general accepted auditing standards and the code of professional conduct. So these are more high level views, but more about the organizational development and less about engagement specific criteria. So that's what we mean when we talk about general accepted auditing standards. Also, the attestation risk model is virtually identical to the audit risk model. Does everybody remember the good old audit risk model? AR equals IR times CR times DR, okay? This is an interesting one, though, that we're not going to spend a lot of time talking about. I'm just going to mention it here. What did I say about AR back for audit risk? How did I characterize it, audit risk? I said it was a constant, okay? It was low or very low. But we know that attestation can have many different levels of attestation risk. It can be anywhere from low to high, which means this is no longer a constant variable. So that creates some interesting relationships with the other components of the attestation risk model. Now, again, we're not going to delve too much deeply into that because it's a little bit beyond our scope in this course, but I do think that's an interesting point to consider is that the relationships do matter between audit risk and the other components of the model, other variables in the model. All right, so that kind of wraps it up. Or sorry, we got one more thing to talk about. So we got one more thing to wrap up with, talk to attestation, and we're going to talk about the reports. Now, remember, I was talking about reports on Monday, and I said, I'm only throwing one category of reports at you. I'm still only throwing the PCOB reports at you because the ASB reports are much longer and much more onerous. You've also got reports with respect to attestation engagements and separate reports that relate to assurance engagements, which I think that's the reason why auditing is such a drill or bore for the CPA exam. Is so there's so many categories of reports now. They're just all over the place, so broad and widespread, and everybody they expect you to know the elements of each of those. So we're not going to go too much into detail, but it's important to note that they do have different types of reports that are issued. So similar to the financial statement audits, they are required to prepare a report, and the elements of the reports, they depend on the nature of the engagement. An examination report is going to be very similar to an audit report, whereas a review report will definitely have some changes that are going to be inconsistent with that. They actually use the term substantially less in scope than an audit in a review report. But they vary dramatically detailed, but they have a similar set of elements. So they have a title, a heading, an introductory paragraph, the scope, which is the work performed by the CPA, and then we're going to actually have something called a conclusion, which depending on the report could actually be a conclusion. For the examination, we're still going to stick to that term opinion. For reviews, they use the actual term conclusion. They differ it, which honestly, what is the difference between a conclusion and an opinion? I mean, from a report perspective, there really isn't any fundamental difference. They're just the same word, just are the same meaning, but two different words. I think they just had said, we have to use a different word because it's not really an opinion. Well, what about conclusion? That's a great word. Let's go with that. Okay. And then the summary of findings, again, there's no assurance provided in agreed upon procedures. So that's why we call it a summary of findings. It's just saying, here's what we found, make your own decisions about it. That's all that the conclusion is. So to be honest, we probably could spend many class periods talking about the elements of assurance or attestation, especially the reports, because the reports tend to be very more varied in their format and structure, depending on the nature of the engagement that we're performing. But this is basically all we're going to be responsible for. So I would focus very heavily on those two tables we talked about. Let's now talk about assurance engagements. So remember, for attestation engagements, we were under statements on standards for attestation engagements, SSAEs. For our assurance criteria, we're under something called statements on standards for accounting and review services. Now, I do want to make a little bit of a caveat here with respect to this area. What we're going to talk about is going to be very, very high level. It will not cover the crux and the scope of all possible types of assurance engagements, and probably because that's impossible. Assurance is very, very broad intentionally. We could do literally any type of engagement that proves the quality of information. What we're going to focus on, we're going to focus on three categories of reporting that relate to financial statements, and that's going to be kind of our scope for that particular area. Now, could you do assurance engagements that are beyond financial statements? The answer is absolutely yes. Okay. But just to keep it simple and to focus on what is going to be a large part of the assurance reporting criteria, we're going to focus on that. And there's three different categories of assurance engagements that we're going to be talking about. So the book is going to be talking specifically about these, and two of these are going to sound very similar. So the first category is called preparation. Does everybody remember when I talked about preparation earlier? So we're going to come back to it. So preparation basically says, we're going to prepare the client's financial statements in accordance with the specified financial reporting framework. Now, if we're talking about publicly traded companies, this is going to be generally accepted accounting principles, but it's not required to be GAAP. It can be on any specified reporting framework that the client requests. That is how we prepare the financial statements. And keep in mind that most reporting frameworks have very specific rules that you have to follow for certain types of transactions that are going to be reported. So we basically prepare the financial statements in accordance with whatever that reporting framework is going to be. Now, preparation engagements are very interesting in the fact that they do not conform to what a lot of other assurance engagements kind of hold as criteria. First one is going to be probably the most important one, is that we are not required to be independent from our client if we do preparation for them. So what do we mean by independent? That means that we don't have an existing relationship. So everybody remember that arm's length transaction related parties? That's an example of a lack of independence because there's an existing relationship. There's a lot of rules about independence that we're going to cover after the second exam. I'm going to give you a big long list and say, here's all the things you have to follow. And you're going to be like, how can anybody remember that, Dr. Barnes? I said, nobody does. Nobody does. Okay. But basically, when we talk about independence, the very, very basic understanding is that you don't have a pre-existing relationship with whoever your client is. In this particular situation, we can have failed that independence rule. We don't have to be independent of the client in order to do preparation. Also, there is no report or opinion that's going to be provided. Now, you will notice that in parentheses, I've got the terms attest or assurance. And this is just kind of an interesting vernacular that the book adopts and a lot of other organizations adopt. They tend to think of reporting as to being an attest function, and the actual issuance and opinion is an assurance function. Now, we've kind of used that terminology before. If we're talking about high levels of assurance, we're saying there's going to be an opinion issued. If we're talking about medium levels, that's a conclusion. If we talk about no assurance, that's just a summary of findings. So that's kind of the analysis when we say an opinion. Opinion is basically the conveyance of assurance in an engagement. So no reporting is going to be done. We don't issue a report in a preparation engagement, and we don't issue an opinion. That's all there really is to it. We're just creating the financial statements for the client. Now, the next category of engagement is a compilation. And a compilation is presenting a client's financial statements based on the representations of management. So you may be saying, Dr. Barnes, you just basically said the same thing twice. And I say, that's a fair statement. Okay, I really just did. So what's the difference between a preparation and a compilation? There's a very subtle difference, but a very distinct one. With respect to preparations, we don't make any judgments as the auditor, okay? Or if I said auditor, I was going to say auditor, and then not auditor as a CPA. We don't make any judgments as a CPA. We basically just follow the rules of whatever it is. And if there's any judgments required, we kind of do our best, whatever the best practice is. But as we know, in financial reporting, there's a lot of subjective things performed. So for example, how do we develop an expectation for bad debt expense? What would be some rules that you would follow? This is Dr. Barnes, that's 303. I've forgotten all that already. So that's fair. It's fair. I have to. Let's go with an easy one. So some percentage of sales, like 1% of sales is bad debt expense. So what makes 1% the correct number? It's not by objectively speaking, there's no correct number. It's just whatever you think of best judgment. That is a representation made by management. And we follow those guidelines whenever we're making estimates with respect to the financial statements. Now, this is a pretty easy one. We're talking about allowance for doubtful accounts. That's an easy one to project. But what if we're talking about capitalization costs for certain projects? How do we determine if a capitalization cost is correct in a certain situation? Can we capitalize this cost versus this cost? What if there's no guidelines? Then we just have to use best judgment. Those are the areas that management would say, this is a cost you would capitalize, this is a cost you would not capitalize, something along those lines. Anything that basically requires judgment on the part of management, we follow those guidelines, and that's what distinguishes a compilation from a preparation. So if it requires judgment, it's a compilation. If it doesn't require judgment, it's a preparation. Now, a compilation has a few important deviations from a preparation, all right? The first one is that independence is not required. Now you're saying, Dr. Barnes, independence is not required for preparation too. You're repeating yourself again. I know, okay? But there's a star there, okay? There's a star. And there's a little type that you can't read down there. At least I can't read it because I'm really old, but maybe you all can read it, okay? So what does it say? It says, though an explanatory paragraph must be included in the report stating the CPA is not independent. So you don't need to be independent, but if you're not independent, you have to disclose that in your report. So you have to tell people, look, I compiled these statements. I am not independent of the client. You need to know that, okay? I do not exhibit independence as a CPA. I can still perform the compilation. That is perfectly allowed, but I also have to disclose that I don't have independence. By the way, does anybody catch what I just said? I said the report, which probably tells you that there's going to be a report being issued, and that is in fact correct. There is a report issued, but no opinion is provided. So we're not trying to make any judgments about the nature of the compilation. We're just doing the compilation on behalf of management. So we do have to issue a report because there's a lot more subjectivity involved in a compilation than a preparation, but we don't have to issue it. We don't provide any assurance. We don't have to issue an opinion. So the third one, this is where things get really confusing. And you know, I've been talking about how I'm repeating myself, and you're going to say this is old man's lost it. He's repeating himself again. What is the third engagement? It's a review. Yep, I really am repeating myself. So what do I mean by a review? In this context, a review is a little bit different than a review of under attestation services. So a review in this context, is expressing negative assurance that a client's financial statements are in conformity with a specified financial reporting framework. Basically, this is a mini audit. Now, how does this differ from an attestation engagement? Keep in mind that in attestation engagements, we're not specifically doing reviews of financial statements. All right. We're doing reviews of whatever the context of the attestation engagement requires. So some examples of those was going to be the pro forma financial statements, management discussion and analysis related to financial statements, but not specifically historical financial statements, the way this is being described. In this context, this is saying we are specifically performing some sort of assurance service related to historical financial statements. Now, this is where things are going to get really gruesome, because there's going to be a lot of similarities to the way that we think about audits and reviews in other contexts, but these are kind of separate unto themselves. So a review of financial statements is going to fall under statements on standards for accounting or review services. A review of anything else, like a review of pro forma financial statements or review of MD&A, that would fall under statements and standards for accounting or for attestation engagements. The rules and the criteria are largely the same, but it's important to distinguish that there's going to be guidelines that we have to follow. If you really want to get confused, just wait, because we're going to talk about reviews, what happens when there's a review associated with audited financial statements, and that gets really gruesome. But let's go ahead and talk about the very basics. Under review, independence is required. So the three assurance engagements that we're going to be talking about, this is an area where independence is required. We do have to be independent from the client, and a report and an opinion are both rendered. And just like in the situation before, we don't call it an opinion in this situation, it's called a conclusion, but it effectively means the same thing. So the terminology used in both types of review engagements is pretty much the same, but it does talk about different types of information. All right, so you wanted a table? There's a table. Okay, here's the table right there. So here's table number 3 that I want you to focus on. That actually may be it. I may have said 4 tables and I meant only 3. Yeah, I'm happy with those 3 tables. Okay. So everything else that we're going to talk about is just gravy, but those 3 tables should be the focus of your efforts when you're studying for chapter 21. Like I said, chapter 21 is not a big area of emphasis of the course. This is mostly informational. So this is interesting down here. So statements on accounting and review services do not apply to the reviews of interim financial statements of non-issuers whose annual financial statements are audited. What does that mean? Okay. These criteria up here assume that a review takes place in lieu of an audit. So we're not talking about financial statements that have been audited. These are only going to be financial statements where there's a review that takes place. But what happens if you've got a company that they've had an annual audit of their financial statements, and then they do like a quarterly review of those financial statements, which is fairly common. You know, everybody's kind of seen interim financial statements usually on a quarterly basis. Is it required to do an audit during those? In fact, no, it's very infrequent that happens. So what happens if you got a company like Amazon that says we want to bring in our auditors and have them perform a review? Well, first of all, they're going to say, well, in this context, we're not auditors, we're CPAs. Because we remember what Dr. Barnes said in the auditing class, okay? But what happens in that situation? The answer is that the statements on auditing standards, ASB, and the PCAOB both have separate standards for reviews of audited financial statement clients. So depending on the nature of the review, it could either be under SSAEs, under statements on standards for accounting or review services, or if it's a public client who have a financial statement audit or annual financial statement audit, the review could fall under PCAOB standards. Or if it's a company that had a financial statement audit but is a non-issuer, that could fall under statements on auditing standards, ASB standards. So any one of those sets of standards could be reviewed. Do you remember why I say this was gruesome to try to remember? Fortunately, I'm probably not going to ask it. Probably, like, 80% chance I won't ask you this on the exam. 82% chance. 81.5. Yeah, there we go. I'm comfortable with that number. Okay. Better chance that I won't than ask that. But it is important to note that depending on the nature of the review engagement will fall under different reporting criteria. Okay, so let's talk about something that's a little bit more easy to grasp, okay? So what is it that we're talking about when we're talking about assurance being provided? We've already talked about this at a level, but this is kind of a visual representation. What do we say about absolute assurance? Absolute assurance is unachievable. It's impossible. It's just not something we can do. We don't have infinite time and resources. Though one day I hope to graduate a student that does have infinite resources, because maybe they'll give some of those infinite resources to the school, and then we'll just have no worries whatsoever. But we're not there yet, okay? So We're going to talk about reasonable assurance as being our highest level of possible assurance. Okay. By the way, if I say that, I mean it tongue in cheek. I'm not just after you for your future benefits. I'm trying to make you improve it. I don't want you to think, oh, well, Dr. Barnes only cares about us if we give back money to the university. All right. Just throw it out there. Okay. I care about you as a student too. Okay. So I'm trying to be snarky, but then I realize that if I say it out there and just leave it there, then it's gonna fester. Okay. So you're okay with that? You're okay with being if you become a multi-billionaire, you're okay with me pandering to you? Good. All right. That's all we care about here. All right. So reasonable assurance, our highest level of assurance that we can accomplish. Okay. This is what audit. This is also where we talk about examinations. All right. This is where examinations would fall. Limit assurance, that's where we issue that negative opinion or that negative conclusion, I should say. Negative assurance or conclusion. That would be the review. And then no assurance are going to be all the way down here. Preparation and compilation. We could also throw agreed upon procedures down here. Okay. So that's the spectrum of assurance that we're talking about. And the differing levels of assurance is going to basically categorize how much work we have to do as the CPA. High levels of work over here, lesser levels of work down here. Now let's talk very quickly about assurance levels. Now, preparation and compilation are similar in audits in the fact that they are assurance services. That's basically it. Okay. They have very little in common with a financial statement audit, other than the fact that they're both assurance services. It's like that weird when you go to a family reunion, you got that weird cousin that lives in the middle of nowhere and sells moonshine for a living. You're just kind of like, I don't know how they're related to me. Yeah, if anybody's got a weird relative like that, it's like join the club. Yeah, I'm from Oklahoma. I can relate. Okay. Anyway, but as the level of assurance increases with the type of service provided, the more closely the service relates to an audit. So we're going to talk about the differences between review services, the similarities and differences between review services and auditing. Okay. So similarities, we have an engagement letter. We are required to obtain an understanding of the client. We also perform two specific types of service or two types of work. We actually perform two types of evidence gathering, analytical procedures, and other assurance procedures as part of a review. We're actually going to perform some inquiry. So we'll talk about that. That's actually two types of evidence that are specified in a review: inquiry and analytical procedures. We also perform an evaluation of results, which is going to be issued in a report. We're going to communicate those results, and we have to issue a management representation letter, which we talked about. That management representation letter, that's the weird letter that's written by the auditor, but it's addressed from management to the auditor. So those are the similarities. What are the differences? Well, the difference in a review is that we don't have to communicate with our predecessor. We can kind of treat any predecessor work as independent of ours. There's no assessment of fraud risk. That's outside of the scope of a review engagement. One of the biggest ones, the ones that you'll commonly see with questions related to reviews, no test of controls. That seems like a sin, doesn't it? After the past 2 semesters of having class with me, talking about how important controls are and saying no test of controls, everybody just cringe a little bit? Or is everybody just kind of like, thank God, I don't have to remember that stupid mnemonic again, CAR. It's like, you will never forget that mnemonic. Mark my words. All right. There's no audit procedures. That's kind of a misnomer. There are audit procedures. They're not called audit procedures, and there's only 2 of them. It's going to be inquiry and analytical procedures. And I really like this mnemonic. Sometimes Becker is a miss. Sometimes they do mnemonics that are just kind of like, why did you waste my time with that? Like the acronym for COSO is crime, CRIME. Don't remember that acronym. It's not worth your time. This one's a great one. It's you liar CPA. Okay. I really like that one. So, because this is one of those low hanging fruit items that you don't need to know what each of these represent. They're pretty straight, self-forward, explanatory. It's a pretty easy mnemonic to remember. Okay. Although being a liar CPA, that's unfortunate. All right. So that basically does it with respect to attestation and assurance. But we do want to talk very briefly about internal audit. Now, the good news is that you've had much more exposure to internal audit already with a presentation from Aspire. I'm not going to really ask any questions over here, but I do want to present some information simply because it is in this chapter about the nature of internal audit. And we've talked a little bit about what that is their relationship with external audit already. They do support the external audit. That is not all they do. And I think if Andy were here and I tried to make that assessment, says, yeah, you're here to support the external audit and that's your job, he would probably slap me. And he doesn't seem like a violent person. So yeah, internal audit definitely has a much broader objective. So I forgot about review reports. So hold on. Oh yeah, I forgot 2 really important. So we're going to talk about internal audit. So keep the vision of Andy slapping me in your back of my mind. We're going to come back to that. Okay. So the review reports are quantitatively similar, but there are some important differences. They refer to analytical procedures and queries, substantially less in scope and audit, that terminology that I already referred to. They specify the review was conducted in accordance with SSARS, and they express negative assurance. And the terminology is We are not aware of any material modifications that they use. Now, there are two unique situations that require modifications of review reports. They don't have different types of reports the way that audits do, but they do have sometimes occasional modifications. Those are pretty straightforward. If there's a departure from GAAP, okay, then that's going to be something they would included as there. And you can tell my animation's off because the departure from GAAP paragraph was on here, but I forgot to change the animation, so this appeared first. And then we also have the possibility of a going concern opinion. So going concern, if we identify a going concern as part of review, we still have a responsibility as auditors to disclose that to anybody who would use the review report. All right. So kind of skipped over some of the important stuff. I apologize for that. Now we're back to Andy slapping me. Okay. So internal audit. So the Institute of Internal Auditors identifies 4 core principles with respect to internal audit. Now, some of these should be very familiar because these are things that we assess as external auditors of the internal audit. Confidentiality, competency and objectivity are 2 that we talk about with respect, specifically with respect to whether or not they can do their job. But it's also important to note that they have integrity and that they keep their information confidential. So these are kind of the core principles in that area. So what are some roles that the internal auditors have? Again, Andy's going to be a much better source for this information. If you're really interested in pursuing internal audit, I definitely recommend reviewing that presentation because they gave you some great insight. But at a very general level, they evaluate risks and controls, which we know are very relevant to what the external auditor does, but they are a lot more hands-on with respect to that. We as external auditors just make sure that we understand the risks and we understand the controls that are in place and test those controls as appropriate. These internal auditors, they're going to be responsible for maintaining the controls and making sure that the management does their necessary updating and monitoring as necessary. So even though they're not responsible for internal controls, they do have responsibility for making sure that management follows up on those as necessary. They also are going to review compliance, which we talked about compliance already. What are the 2 words with respect to compliance? Laws and regulations, okay? Laws and regulations. We want to make sure that we're following the compliance rules in the organization. Andy actually talked about that in the presentation. I shouldn't leave it Eric out. Andy and Eric both talked about that. But the energy industry, he said that was one of the most highly regulated industries, so they had to make sure that they followed the rules there, and that was a big part of their job. Also, financial auditing, helping prepare the financial statements and making sure that we are prepared for the financial statement audit that occurs on an annual basis in most organizations. That's going to be something that they help assist with and they can perform independently in certain situations. Also, operational auditing, which I've alluded to, but remember we talked about controls in different areas. I said the controls over financial reporting are important, but there's also the objectives with respect to compliance and there's the controls with respect to operations. That's kind of alludes to the things that Dr. Oteros talks about in managerial accounting and cost accounting is the operations that go in place in an organization. Those are going to be proprietary and organizational specific, but is it still possible to evaluate those? To evaluate the operations of organization to make sure they're doing their job properly? Yes. And hiring an external auditor probably is not going to be effective in that because they don't have familiarity with the internal operations of an organization. They can do financial statement audits just fine, but operational audits, that's going to be more under the purview of the internal auditor. So to wrap up, some of the work performed by the internal auditors is directly relevant to the work of the independent auditor. So keep in mind that we can talk about the work that we can use as external auditors from the internal auditor, but we still have to do that nature of the evaluation that we talked about before of objectivity, competence, and the application of a systematic and disciplined approach. So in order to make sure that we can get our most out of our work, we have to make sure that they have done their work to the degree that we can rely upon it. And those are the 3 criteria that we talked about much earlier in the course, just a reiteration of those points. And with that, we are done for today. We have homework on Friday, and then we've got the exam review on Monday. Please make sure you complete the practice exam before we start the exam review. I will see you all in about 47 hours.
Oh.